Hi, everybody. Welcome back to the Convergence. Today, we're going to be talking with the team over at Zivoe. I've got John and Thor with me to talk about decentralized finance and how they work inside marginalized communities to help people establish a Web3 credit score, something that's sort of a new concept that's coming out. But I'm excited about this interview. I had a great time meeting these guys recently at one of the Venture Cafe events here in downtown Phoenix. And we had a great conversation that night, and I had a great time recording with them and learning more about what Zivoe does. All right, here you go. Hey, everybody, welcome back to another edition of the Convergence. Today, I have some very interesting guests that I recently met at one of the Venture Cafes. I have John and Thor from Ziveo. I just said it wrong, didn't I?
Absolutely.
We shouldn't have done that. It's Zivoe, and I know it. I'm just totally jagging with you guys. So we're going to talk a little bit about decentralized finance today, and I know we've talked about that in other episodes of the show, but I think what Zivoe does is a little bit unique in that they're trying to solve a very a problem that really does affect marginalized communities. So welcome to the show, guys. Thank you for being here, and Thor, John, welcome.
Awesome. Yeah, thank you very much for having us.
Thor, tell me a little bit about the background of the company. Maybe a little bit of your background first. Let's do that. We'll do backgrounds with you and John, and then we can talk a little bit more about the company.
Yeah, for sure. Really happy to be on, Derrick. So thank you for having us. And in terms of my background, I have been kind of involved in crypto in some way, shape, or form since about 2016, 2017 going on now. So for a while now, I think like everyone, when kind of the kind of run up was happening in 2017, it was like, ooh, here's a shiny object that, I could trade or kind of do something on. And, after I kind of began learning more about it, I was like, okay, there's, really something here with some substance, and have just kind of been down the rabbit hole ever since. And then prior to Zivoe, I spent a little bit of time in banking. And so I will kind of hand that off to John to kind of introduce himself.
Yeah. Thanks. I've been in crypto as well since 2016 or 2017. But I like to get my hands dirty. So I'm a builder. I ended up working on protocols and building things on Ethereum. So I built out a couple of NFT features for a company called Zed. They do horses NFT racing, and that was a very fun. It was like my first time I started working on smart contracts for a company that had like a public product. And from there, I kind of leaped, if you will. I went over to this company, Maple Finance, and I designed and built out the V1 of their smart contracts, their protocol. And it's been a very successful protocol, and props to them for making it so, because it's not just the building, it's the business side as well. And they've done like over 1.9 billion in loans off of that protocol. And I've kind of taken that expertise from building these lending and borrowing protocols and migrated that into Zivoe.
Well, tell me a little bit about what Zivoe is, because I like where you guys are going with this. And when you and I, John, when we met, we talked a little bit about what you guys were doing. Obviously, you guys, and as I've looked at the team really has a background in finance and understanding this, as well as productizing things, which I think, to your point, John, is really important. So tell me what Zivoe's real utility is here.
Yeah, for sure. Happy to kind of give you some background on Zivoe. So Zivoe is a decentralized credit protocol, and what we're working to do is disrupt high-interest consumer lending. So for those who are not familiar, because a lot of people maybe have never even actually heard of this market or aren't familiar, but it's a $70 billion market in the US alone. And that's not counting the rest of the world. And within that market, there's $20 billion that is unsecured high-interest loans. And those loans, part of them are what are known as payday loans, and those loans can have an average interest rate of 390%, which is really insane when you think about it. No one should be getting a loan at that interest rate. And in many countries, it's actually even worse. And yet, despite these high interest rates, 12 million Americans take out one of these loans every year. And so what we're looking to do is leverage the power of the blockchain to work towards building an automated direct-to-consumer lender that we believe is going to allow us to recognize a number of cost synergies compared to a normal traditional lender. And when coupled with our team's experience in this kind of industry and some of our kind of analytics and stuff, we believe we have a way to essentially offer a portion of individuals who normally take out some of these high interest loans, a loan at a significantly lower interest rate.
I worked in credit many years ago, in high risk credit, consumer credit. And the challenge was it was a risk analysis, right? I don't want to get too deep into it, but I got to tell you, I was a repo man early in my career, and I worked at a company that did high risk, and there were people that had 50 repos. Like we had repoed them 50 times through the course of their 2 or 3 year loan, right? It was a constant revolving cycle because they were really struggling for cash, and we understood that. When they made their payment to us, it was likely because they went to a payday loan place and so it was just a matter of time before everything came crumbling down. How do you get around that? Because I mean, it's a really unfortunate predicament to be in. The people who are subject to have to get these kind of loans usually are people that are struggling financially, and that financial struggle results in poor decision making on money. So how do you resolve that with a decentralized protocol?
Yeah, for sure. So I will touch on a couple of things. That was a big question there.
It was.
The first part I'm going to touch on is the credit risk part, because DeFi does not necessarily solve that component, because credit risk is credit risk, although DeFi eventually is going to help us solve part of that. And so the thing with Zivoe and what we're doing, and also in conjunction with some third parties that are helping us actually originate and service loans initially, is we're not looking to essentially lend money to first-time borrowers. Okay. We're focused on individuals who have taken out one of these loans in the past, have actually successfully repaid it, and then for whatever reason are actually going out and getting a second loan. Then so those are the individuals we are targeting because they have a history of successfully repaying a loan.
That makes sense.
And then on a higher level, there's two concepts in lending that are kind of really important, and that they are moral hazard and information asymmetry. So moral hazard is the concept that if I give you a loan with, let's say, a 400% APR, because unfortunately that is not uncommon in payday lending, what incentive do you actually have to pay that back? Because your credit and stuff is obviously already bad, and so you go, okay, I just got a 400% loan, but they gave me $1,000. I could take this $1,000 and run and, not have to pay them back $4,000. And it's like, my credit's already crap anyways. And so when you give people high interest loans, you immediately create an incentive for them not to repay you.
That's right.
Because of how much the interest is. And then the second concept is the concept of information asymmetry, which is that as a lender, I do not necessarily have the full picture of a borrower. So, there may be 10,000 different data points out there about me as a borrower. But when I go apply for a loan, a lender may only see 100 of them, right? Yeah. So they're making a decision about your credit worthiness based on an imperfect picture. As technology has gotten better over time, that gap has begun closing. And so we believe that we have certain ways with analytics to essentially give us a fuller picture of a borrower that will allow us to make a more informed credit decision. And so part of eventually what we want to do as well with kind of our protocol is we actually want to make Web3 credit scores. And what we want to eventually do is we believe our kind of core thesis for this entire protocol is eventually DeFi and TradFi are going to merge in some manner, and a lot more information is going to go on chain.
So say that DeFi, what was the second one?
And TradFi are eventually going to merge.
Okay, so what does that mean? I want to make sure people understand what that term is.
Yeah, for sure. So traditional financial systems. So,
Got it. Got it. Yep.
your JP Morgan, your Chases,
Yeah.
all those guys, your banking infrastructure, your Swift, all the stuff we kind of take for granted and use on a day-to-day basis.
John, tell me a little bit about the technology. How did you guys accomplish this, and how, what does that look like from a protocol perspective and from a user experience perspective?
Yeah, absolutely. Great question. So I'll start out by explaining the basic premise of the architecture of Zivoe. It's fairly simple. So we have a DAO that essentially escrows capital, and the DAO is able to, through governance, to allocate capital to different lockers. So it's kind of like maybe like a hub and spoke model. So you've got your center, and then the DAO can put capital out into different lockers. And one of the beauties of what we've built, there's like two kind of fundamental foundations, let's say, or concepts that I've tried to really ensure we're present in this protocol. And that is, one is modularity, and two is diversification. So, one's more technical and the other is more like financial, but I'll kind of explain each of those. So modular essentially means that we can design and implement new lockers over time, and the DAO can push and pull capital from these lockers. And then once capital is in these lockers, we can do various things with them. So to begin with, it could be as simple as a locker is originating direct loans on chain to borrowers. We could have much more sophisticated financial products like credit guarantees or even lines of credit from there. And so that's the nature of being modular. So we can adapt to changing market demands, and not just market demands, but essentially client demands, borrower demands. And kind of in tandem with that is diversification. So initially, we're looking to effectively lend to the U.S. Markets. But imagine if we had multiple lockers originating loans, and these could be separated geographically. So we could have different regions. So imagine you've got this large capital system, and then it's flowing capital into 5 different locations, which represent different geographies and around the world. So if one part of the world starts to suffer or degrade, this isn't going to massively impact the entire system. So that's the basis of diversification. You could theoretically, once the Web3 credit score models evolve over time, both internally, and there's many, a couple other actors out there trying to build these Web3 credit scores. So, it's not, and that's even in traditional finance, you've got different people doing different credit scores, and you can kind of aggregate them to get a holistic picture of someone's credit. But you could have different lockers focusing on lending to different credit scores people. So that's just another way to kind of diversify and maybe even optimize the way capital is allocated on chain. So it's this like biological evolving system that to me, from the technical side, gets me very excited.
Absolutely. So John or Thor, going back to this, so Web3 credit scores, tell me that idea a little bit, because I think, we have a lot of investors that listen to this show, and that's something that they're going to be intrigued by. Is this incorporating their existing credit score into that as well? Or is it really a standalone credit score based upon, essentially your history in the DAO?
Yeah, for sure. So a couple of things there. First off, John did a great job describing that and has been, a huge part of kind of getting this done. So appreciate him. And the Web3 credit scores are something we're looking to do kind of further down the line. So that is not like an initial thing we're looking to do, but where we're trying to go with that is, as a lender, especially on the consumer facing side, we're going to have access to a lot of information about individuals and borrowers and such. And especially if you look in other countries, right, like credit scores are a pretty American thing, actually. Bring a lot of that information on chain and be able to essentially make Web3 credit scores for individuals that they could then go use anywhere.
Tell me a little bit about where you guys are as far as a company right now, and where's the next 12 months sort of going, both from an ops perspective, to a go-to-market strategy, and then as well from a development perspective.
Actually, it's kind of impressive where we're at from a development perspective. So our protocol is effective, I'd say like 95 to 98% built. And what I mean by that is, so essentially, maybe this isn't well understood, but effectively, when you're building a protocol for Ethereum or any blockchain, you go through generally an auditing process. Generally, multiple security audits are done on the protocol. So you have one, or not just one, but you'll have two firms reviewing. And because if you look at 2022 and you look at the amount of capital that was hacked or stolen, siphoned, or whatever, I think well above like 5 billion or something.
Wow.
So it's something that has to be taken very seriously, because the last thing you want to have happen is you launch your protocol and all of a sudden, all the capital's gone.
Yeah, isn't that funny from an unhackable? I mean, I remember back even a year ago, everybody was like, "Oh, it's these protocols are totally unhackable. Fraud is impossible. It's not." And then what happens, that becomes sort of the thing that brings it down.
Let me tell you, the damn problem with code is that it does exactly what you tell it to do. And so what happens is people launch smart contracts, there's code in there, and it does exactly what it is intended to do. But it has these unintended consequences. People don't realize it. And so that's a huge part of security auditing and probably the biggest friction in development in blockchain right now is that there's so many unknown things when you create a piece of code, that the ramifications of it. So at any rate, from a development perspective, we're like, it's like adding the icing on the cake and putting a little the cherry on top and whatever the swirls in the so and we're actually just kind of doing a large security implementation ourselves. You always do that internally, and then you hand it off to auditors. So, within the next 6 to 8 weeks, ideally we'll be handing off our protocol for an audit. And that's the smart contract, the on-chain protocol side. There's a couple other pieces of systems that we're developing as well. So you need a front end, like a dApp, a decentralized application to interact with the protocol. And so we're making massive strides there. And that's going to sync very well with performing an audit and completing it. And then we launch that. And then, Thor, I'll kind of let you talk about
I was going to say,
market from there.
Thor, let's talk about that sort of go-to-market. Where do you guys go here? When do you see customers coming onto the platform and those kind of things?
Yeah, for sure. So we are in the middle of kind of closing a fundraising round right now. So we're looking to raise about $2 million. And we have some commitments into that. And so having a lot of positive movement there and hoping to get that wrapped up within the next couple of months. Nice. We're targeting Q3 to begin kind of making some initial loans. And I think this is maybe a good spot to kind of talk about how we're rolling the protocol out.
Right.
So initially what we are doing is actually partnering with essentially third parties who are originating and servicing loans on our behalf. And we are acting as almost a credit hedge fund and providing them with capital. And the interesting thing with that, though, and John can maybe talk about this a little bit too, and this is a big part of maybe merging the TradFi and DeFi, is we actually have a lot of kind of traditional financial technology built as well. So we have things like, credit decisioning engines and kind of underwriting tools and stuff that are able to kind of operate in a more traditional manner that actually allow us to do, actual underwriting and stuff instead of kind of doing a lot of this stuff manually. Initially, we're partnering with third parties. And the reason we're doing this is because in the US, there are a lot of restrictions in regards to lending laws, especially to consumers. And so what we actually have is we have our own US compliant lending entity that is able to legally lend in the US to consumers. And so they are going to be the ones that are actually servicing and originating loans on behalf of the DAO. However, these loans, the way, because this is a question we've been asked, are actually essentially put into an SPV or bankruptcy remote vehicle that's owned by the DAO. So they do not have risk associated with having a third party actually do the originating and servicing.
Nice.
And then what we're then going to be working towards is actually building out the automated direct-to-consumer lending abilities. And so the vision with that is eventually what we want to be able to do is lend directly to consumers as a DAO, and we actually want to be able to lend to them in fiat.
Nice.
And the reason being, and there's some technical stuff we have to figure out, but there's protocols like Cato Money and Spritz Finance that are kind of doing like direct deposits from on-chain into like bank accounts or virtual debit cards. Is this demographic that we're trying to kind of help and provide with loans, they are not necessarily going to make a Web3 wallet right now. The wallet UI and UX is just not quite there. And so we're looking to kind of meet people where they are to begin with. And eventually it would be really cool though if we could do this all on chain.
Let's talk about the servicing aspect of this, because that can be a bear, right? I mean, I've worked in the finance field a little bit in the past, as I mentioned, with high risk automobiles in the past, and then I did some consulting for a company that did a lot of the like credit repair stuff, where it was like we're trying to get you personal loans and doing all those kind of things. And the servicing part of this business is not easy. How do you overcome that in your model?
Yeah, for sure. So I think the servicing, and I'm not as familiar with kind of your experience there, but I think the servicing is not as hard maybe as people think with that. And that's part of why we're doing this in the US to begin with, because the laws are very clear with how stuff goes. And we're not a extremely high interest product. And so, that's going to probably help a little bit, because we're not going to have the same amount of defaults and kind of collection issues that normal people or higher interest lenders would have. And so in terms of servicing, it's pretty simple. A kind of borrower will make kind of payments on a schedule, either biweekly or monthly to us. And then if they do not repay, they would go into a grace period where we would work with them to come up with some sort of payment schedule or something to essentially make them current again. And then after about 90 days, they'd be considered delinquent on their loan. And then at that point, we would then begin to collect from them. And there's, legal recourse in the US about what you can and cannot do for collections. But that is kind of the short answer about how we would actually go about servicing these loans. That would be done with Zenclusive, our US compliant entity. They would be essentially servicing on behalf of the DAO.
That makes sense. And that was really what I was asking is like, are you guys planning on doing this on your own? Or do you have a partner that can help on the service side of stuff if things go bad? Timeline to roll out. You're thinking third quarter this year. And what type and size of loans are you looking at doing through this? Are you starting out at more of a personal loan, or where do you sort of see that falling out?
Yeah, for sure. So the way you can almost think about this, right, is the initial loans they're not necessarily a line of credit, but it's almost like a line of credit or a line that a business can draw from, because as we originate consumer loans, we will be essentially funding those loans as a DAO and sending out, chunks of money in order to fund those. So we're not going to, send $1,000 or $2,000 off chain every time, someone gets a loan, because that's just not necessarily economical. So we may chunk that out and send, a couple $100,000, maybe $1 million at a time. And that'll be used to then fund loans that are then going to be put into kind of that SPV I mentioned earlier that is actually owned by the DAO. And then the DAO will receive the proceeds from that, which can then be brought back on chain.
So let me ask you a couple final questions here. And John, let me ask you this first. And I think it's just really about, where do you see this technology evolving over the next 5 years? And when I talk about that, I don't just mean with you all, but just as the market in general. And I know 5 years it's a lifetime anymore. The fact that ChatGPT just celebrated its 61st day anniversary, and the whole world has changed as far as, Web3 tells us that it's really hard to predict that. But obviously we all, think about the future as entrepreneurs. What do you see the future of decentralized finance and Zivoe's role in that?
Yeah, wow, that's an amazing question. And a 5-year timeline is massive. That's a lifetime.
Let's call it 5 days then. No, I know it
In
is
5 days.
it is crazy because I mean I'm talking, I'm going to be 50 this year, and I will tell you that even 6 years ago, 5 years ago, that was the big question: is where is this company going to be in 5 years? And now that's like a joke. I mean, it really is, because 5 years, I mean, think about where we were 5 years ago. I mean, it's just insane. I think it was Google just recently that said Moore's law for the first time ever is actually broken, right? We're actually, computing power is going faster than the doubling, and with potential AI singularity on the horizon, which we'll talk about in another episode. Holy crap. I mean, we could see thousands of years of progress in days, weeks, and months. But maybe let me rephrase that question, John, and say, where's the future of decentralized finance?
Where's the future? Well, I'll add an AI twist to it. Yeah. I do believe there's going to be some level of singularity within the next 5 years. Right now, I mean, protocols are very sophisticated. It's a very manual and laborious process to develop and launch a protocol on Ethereum or any blockchain. And I think AI will, over the next couple of years, make drastic steps to allow really anybody to launch their protocol. And so the premise of DeFi is that anybody can come into it and work with it. And so I think what we're seeing, maybe this is a huge prediction, but maybe central banks sort of begin to disappear, and everyone creates their own, not just their economies, but their own protocols. Like, if anybody can spin up a lending and borrowing protocol within a couple of days, in a few years from now, with their own features and their own specific. And Vitalik just there's a podcast out there called The Network State, and you guys should check it out. Vitalik went on and did the first episode of it. And it talks about how, governments are sort of dissipating, and it's becoming more like localized to decentralized. Decentralized communities form their own government, but it's decentralized, and they form their own economies and everything. So I think we're progressing towards that. And obviously, I think lending and borrowing is an important aspect of financing for any businesses or ventures within these network states. And so I believe Zivoe Finance will play a huge role in that.
Nice. I agree. I think globalization, the end result of globalization has been localization in a lot of senses. It's so weird to say, but like the broader that we went, the more local we are becoming, where decision making is done on a local basis, just because it's much more efficient that way. There's certain things that globalization can't do, and I mean, it certainly can break down the walls of borders. But in doing so, what it has essentially done is create a lot of markets where people have now started to go local because of that. They've realized that it's easier decision making, choice. Those kind of things are things that are almost impossible to put in a decentralized world community. They've got to be decisions that are made locally. So I appreciate that. And I think you're right on where that's going. John, what about you? Where do you see this thing? I almost said the 5-year thing again, but let's just talk about what's the future of decentralized finance and the type of work that Zivoe does.
I think for me, the future of all this stuff is, and I'm gonna use your podcast name here, is the convergence between DeFi and TradeFi. I think that as this stuff gets better, especially the wallet UX, or the ability for just kind of anyone to actually interact with a protocol or a blockchain, is that we're going to see more and more of our financial infrastructure be either touching a blockchain or on a blockchain. Yeah. And I think this is something that people are really going to want, especially when you consider, in other countries, maybe not in the US as much, but I think Argentina, and I think over the last year has seen 99% inflation in their currency. And, you have all these countries where their currency is pretty close to worthless in some ways. And I think people want an alternative and need an alternative. And I think that eventually blockchain-based systems will replace a lot of existing financial infrastructure.
Well, and I think there's just, no matter which way you look at it, there is less manipulation in a decentralized system. I mean, even here in the U.S., right? We are fiat currency. We don't have the gold in the bank anymore. We can go print more on the back end, and that does cause inflation. I mean, we're dealing with inflation right now. For some of the reasons for that are the fact that we've printed too much cash and we have too much in circulation. But great stuff, guys. For people to find out more about you, it's just zivoe.finance, right?
Yeah, Zivoe.finance. Also check us out on Twitter at Zivoe Finance.
Perfect. And thank you all for joining me here on another edition of the Convergence. Make sure you like, subscribe, check things out. We're going to start switching a lot to talk more about AI here over the coming weeks, just because it is a hot topic, but we'll always be here talking about Web 3.0 as well. Okay. Well, until next time. Hey, well, thank you for listening. Make sure you like and subscribe. And if you've got friends that are into the Web 3 or AI space, make sure you share this show with them. Next week, I've got a very interesting guest, Peter Sisson. Peter is the Chief Technology Officer, co-founder at a company called Certify It. And they are helping rid the web of deepfakes.
Thanks for listening to The Convergence. If you want more information about the topics you've heard here today, reach out to us at theconvergencepodcast.com.